Good morning, I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname, and you can find my Fibstalker Methods Coaching Program at the www.fibstalkertrading.com. Today is March 1st, 2nd, 2015. This is the review for the week starting on Sunday, March the 1st, and it's Monday. It's 10 to 1 p.m. in Toronto. In this video, I'm going to review for you the main markets I follow. I'm sorry for not being able to send this email yesterday. So let's start from the Euro weekly time frame. We know that the market is actually moving into that first target, 109 level. That's the most probable outcome at the moment. The reason for that is that we have this multi-year resistance of 139.721. Now, recently what happened is that when we move on the daily, we know that notable anchor has been used in this market, and that's an anchor that we identified after the fact. I'm going to remove these these averages here. I'm testing at the moment an intraday method that uses averages crossover in a counter trend way, and those who follow my program actually benefits from of this information as well. So this level, the 115.37, was identified after the facts, and however, that's important too because it was confirmed last last Friday when we saw that huge move lower. And when we look at where this market is being pushed to, is being pushed into that same area, the 109 area, that is a target on the weekly time frame. So those two targets, the daily target here and the weekly target, lines up. So it's possible for this market to just continue lower into that 109. Moving to the SP500, the SP500 has been moving higher as we know, and at the moment we start seeing the possibility of a correction here. If a correction materializes, remember that this market has hit the first target of that setup. It originated in 129 20 sorry 1830 here in the past, and the first target was it. Now we have a second setup here on the daily, and that first target is 2121, and I believe we're going to see that level soon. Now if this price retraces, this last move has been an extension as well, so we can actually trace from the highs to highs, and if the market retraces, that's the level that we are looking for, the 2069, and we are going to apply the Fib stalking timing technique into that level. Moving to the dollar index. The dollar index is another market I follow. You will remember that in the last few weeks we identified a level after the fact, the 93.68. That level retested. That's the importance of looking at these levels and identify these levels. So even when we cannot trade the first time, if they are retested, we can apply the technique and actually take advantage. So the dollar index, of course, is confirming the euro scenario here, so for a potential of a continuation higher based on this 93.68. This level has a target above as well, and it's above 97 here at the moment, and that's a level that we could see if the euro dollar continues into the 109. Moving to gold. Gold in the last few days and weeks has been moving laterally, as we know, and we know that this market has actually failed longs and shorts in the last few weeks, and that's always an indication that this market is due for more lateral moves here, and as we can see here, um, long and short have failed, so there is the possibility for this market now to run into the 112.38, and there, as soon as the sequence of measure move fails, we could see this market reversing again. So at the moment we are moving higher, and there is the possibility for this market to move into that area starting at 12.38. Moving to the US dollars Japanese yen, as we know, this market is on top of a potential area of support. That's the daily level. This level has been has traded twice now. The first time it was in mid of December here. The level was 16, and the 16 level has traded again, and there is for the possibility for this market to continue higher, especially if the US dollar continues lower. So whenever you take this position, you have to take this position and keep them, especially when they are confirmed. And the confirmation of this measure move here came when this 1958 level was pierced on the upside again. And although this measure move is not well formed, the market can still keep being pushed higher by smaller time frame. This market never came back to trade the all the way halfway back here. The 1822, we have 1817, actually 5 pips, actually, sorry, my correction here on this time frame that happened. There was a 5 pip there, so we can consider that valid. Yeah, and so the first target for this market is 121.60 at the moment. Okay, so that's where we could see this market moving to the euro versus Japanese yen. I will remove this trend line. I don't use this trend line. I only use this information to prove the fact that they are not indeed very useful. And those who follow me know that in this market I'm looking for a retrace. I can show that on the weekly time frame. I'm looking for a retrace all the way into this 121, 122 level, and that's where I believe, you're going to see this market. So I've indicated a level, the 137.64. The market has now reversed at that level, and I'm going to use a similar level that I use for the euro dollar. I'm going to use this for the euro versus Japanese yen. And as you can see, we didn't get into the level as well. So there is a possibility for this market to either just continue lower at this stage, and remember that we had a 133.40 50% level here, which would actually propel price into that level 137.15. So this is the level I'm going to use. If the market gets there and the sequence of measure move fails, that's a level where we can get short this market. Moving pound versus Japanese yen, this market is in a long, and however I would have wanted to see, or waiting to see this market to test this 173.20. The reason for that is that that was the next measure move in this market. So this market also is still on the weekly time frame, still testing an area of potential resistance there. So whenever and if the sequence of measure move in this move higher fails, that's an indication for this market to start moving lower. So and the target would be that 73.28 if that happens, because that's where we anticipate participation from program trading. Moving to the euro versus the Canadian dollar, this market has been moving higher after testing for the first time. It is 138.60, and it's now apparently retesting the level again. This is what we see on the weekly, and on the daily we can check. You remember I also mentioned the potential level of support. Now, the level of support has provided, has pushed this price higher twice, three times, and eventually the market gave up here. And we can always look at the opposite side, participation of program trading. Initially that participation failed, but then market started respecting this 142.80, so now it's a first target, and this market will just continue lower again into this area of support, or it could actually come back and test the all the way halfway back of the next measured move. So in that case, if the price gets into this level here, which we trace from this level to lows, the 141.41, and the market gets participation there, we will see this market pushing into the first target 138.66. So that's what we could anticipate in this market. In the last five pairs here, we have, starting from the pound versus the US dollar, this market got participation here to a level that we identified last week. This is an extension short, and as you can see, the sequence of measure move failed when the market got into this level, and this is an extension that um, actually traced from a previous important anchor here, and actually this level got participation here. So we need to now go and study the sequence of measure move higher here, and when that sequence of measure move fails or has failed, that's an indication of continued participation on the downside due to this. And you will remember, or if you follow this market and you follow the sequence of measure move, you will see here that this level, the 154.27, has been pierced on the downside on on Friday here, and that was a confirmation that this resistance here is real, and now that could bring this price lower into the next potential level of support, and that won't come before this 120, 152.51. So if you're short this market, that is going to be your first target or profit taking, partial profit taking here. And of course this market can continue lower, and uh, this is somehow following what the euro is doing as well, so we can anticipate the lower price here. Moving to the Australian dollar versus US dollar, you will remember that this market has been hovering around this second target from a very large time frame, and that is the second target of a traditional measure move that we traced back in 2000 and 2014 here. This was this measure move here, 2013, sorry, and we move into the first target and second target, and the reason why you saw this market hovering around this level is because algorithms are taking profits at this level, professional traders are taking profits. So of course this market can continue lower, the market can always do anything. However, the the large time frame would be willing to sell this market on the at a much higher level. So these levels were not tested, and so the weekly is neutral at the moment, and who's pushing this price are the lower time frames here, and we could try to check where this market is reacting to, and that's definitely an extension, and it could be one of the notable extensions here. So we have this level identified, and the market is still testing potential longs for continuation higher here. We are having this area being tested here, there is a potential short that could push this price lower. However, if the sequence of measure move fails here, we have the possibility for another run and trip into that 78.97. The reason for that is in this area algorithms are taking profits at the moment, so these are weekly algorithms are working on the weekly time frames, but this market could keep being pushed down from the daily or smaller time frames. Moving to the US dollars Canadian dollar, this market has been moving laterally in the last few weeks, as you can see here. The reason for that is that this market has actually been pushed higher into a level that it's a potential level of resistance here, and this resistance is coming from a very long termed area of potential resistance here, which traced from the highs in 2001 to lows that we saw in 2007. And that's the reason why we are seeing this reaction at the moment. Now, if this market keeps correcting, the next level of participation on the long side will be and will come at this 120.41. So that's where we could see this market correcting through if the move lower continues. This market is actually moving on top of potential level, an area of support at the moment, and we identify this area as an extension. As you can see, price never came into and below, came into this area of support but never came below 123.35. We get there, we could see a continued move lower here. Moving to the New Zealand dollar versus the US dollar, this is another the second last pair I'll show you today. Last week I mentioned a potential level of resistance here, and that was traced from the highs to lows here, and as you can see, although price got into this area, the 075.34 to the 076.19, the level was never pierced on the upside, and we're seeing some participation on the downside. Today, that's what we in the last yesterday and today, and actually this gives a better picture here. This market actually has responded to this 074.43. Never was able to get into that first target, but the participation in this area actually is pushing this price lower. So what happens now is that this price gets back into 74.43. There is a possibility for a bounce if the sequence of measure move fails. Otherwise, if the level 074.12 is pierced on the downside, then we are going to see this price moving potentially again into these lows and even below that. Finally, I'm going to close with the USD Swiss franc, which is, unfortunately, on this market I don't have up-to-date data, but what we see here is that last Friday this market was still hovering around this area of potential resistance. You remember that we had the resistance here, the market then got into this area but could not get above 095.56. I don't have up-to-date data at the moment, and so what we see in this weekly time frame is still potential area within a potential area of participation of this lows here into potential lower level here in the daily time frame as well. So this is it for this week review. Sorry if I couldn't send this review before. If you have any comment on this review, please let me know, and as usual, if you have any question, you can send me an email. I respond to the email personally, and you can definitely check my articles, and I'm also going to publish all the previous reviews in the last few weeks on my blog as well. So thank you very much, and I wish you a great week. Bye bye now.